Welcome into Mining Stock Daily. We have a corporate introduction today by a new guest and a new company. I put out a tweet, about a week, or maybe it wasn't even a week ago, looking for some ideas of where our listeners wanted to hear from new companies, and got an overwhelming response. But one of those companies that was mentioned more than a handful of times was Kuya Silver. Kuya Silver trades on the CSE with KUYA and also on the OTC QB with KUYAF. Happy to be joined by Chief Executive Officer and President and Director of the company, Mr. David Stein. David, thank you so much for joining us here on the podcast.
It's my pleasure, Trevor. Thanks for having me.
This is an interesting project. Kuya Silver's really flagship project is the Bethania gold mine in central Peru. Basically, fairly new. I think you're new to the position, but you are not new to the resource market. It's an interesting, turn of a career, if you will, a little bit from what you did previously. So why don't you give our listeners a little bit of a rundown regarding your experience and transitioning into running a company?
Sure. It has been a sort of a long journey to get here. I was educated as an engineer geologist. So I come from a technical background, but I got into finance very early in my career. And the first 9 years of my career, I was an equity analyst for one of the mid-tier Bay Street firms. And, that was a really great opportunity to get introduced to the market as it kind of slowly developed into a bull market in the early 2000s. And, I really feel like I had a front row seat in the development of a lot of the new companies that have some of which have become large cap, miners today, and many of which were of course taken over as well, as happens in our business. But some of the first companies I picked, or some of the companies I picked up coverage of included First Majestic and Fortuna Silver, for example, in the silver space. I was always exclusively a precious metals analyst, so gold and silver. And then a little later in my career, I sort of shifted towards asset management, and I was working as a principal guy at a merchant bank, where we were doing all sorts of different types of deals, including passive equity, active equity investments, where we took board positions and stuff, loans, royalties. So I kind of did it all. As we sort of shifted into the bear market, I think we're now through it, but this would have been back in 2012. I started really looking more at private equity as a way to get projects, good projects funded. And I really, for the next few years after that, dedicated my career to developing, relationships and understanding of investing in private equity. And then a few years after that, I sort of went out on my own to basically continue that, that private equity journey. And I ended up finding this silver mine in Peru that really fit my strategy perfectly, in the sense that it was a relatively small capex project, because big capex scares me. When I saw this this high grade silver mine that was on care and maintenance, it really reminded me of the early days of First Majestic, when they started in Mexico, or even Pan American Silver, which started 10 years before that in Peru with a similar kind of high grade mine, small tonnage mine. So these projects can be very profitable. They can be great ways to launch a company, because they're not that risky. And so I ended up investing in it myself and starting Kuya Silver, and then 3 years later we were public.
All right. So I recorded an interview yesterday, but it hasn't been published yet. It comes out on Friday morning, but with Minera Alamos President Doug Ramshaw. And we actually talked in length about building companies based on smaller projects, and like your business strategy isn't necessarily to make it big and grand and then sell it off to the next major. Like you're looking long term for the cheapest and most valuable way to generate cash flow. Obviously, Minera Alamos is on the gold side of Mexico, but can you make some of that comparison to what you are trying to do in Peru here on the silver side?
Yes, I think it is, that is the strategy really, and it is something that is, I think you can do in the silver space especially, not to say you can't do it in gold, but in silver mines really lend themselves well to this kind of strategy, in the sense that a lot of the real producing silver mines out there, tend to be 5 million ounces per year and less. And obviously, if you convert that into gold equivalent, you get a, kind of a small number that most people wouldn't care about. But in silver, that is actually a big deal. Partly because there are so few silver companies out there, like real silver mining companies, where most of their revenue comes from silver. So there's few choices for investors. And and silver is a smaller market in general, as compared to gold, at least. So if you can put together 2 or 3 of these mines that, let's say, produce between 2 and 5 million ounces a year, you'd be one of the probably top 10 silver miners in the world, and that's something that I think we can easily achieve at Kuya, not right away, but over the next several years. We've got our first mine lined up, which is the Bethania mine in Peru. So we've got a great starting position there. And, opportunistically, we can look at other, projects that sort of fit that criteria. But the beauty of this business model is you don't have to swing for the fences, and build a, $200 or $500 million CapEx project for growth. And those projects, not only are they more difficult to finance, but they also tend to be more controversial, when it comes to environmental issues, community issues, etc. So these smaller mines are just a lot lower risk, whether you look at it technically, financially, CSR, everything about them, to me, is lower risk. So that, to me, the risk return is really fantastic, and that's why I like this business model.
Before we move on, I will apologize for botching the pronunciation of Kuya. I did say Kaya before.
That's okay.
I'm sure you've heard that.
As long as people buy the stock, you can say it any way you want.
Well, let's talk about the Bethania asset in Peru. Obviously, this is, I guess you could call it a historical asset. It's got a lot of infrastructure to it. But let's hear it from you. Like, what do you have here, and what was so intriguing for you to pick up this project and present it to the market?
Well, okay. So the summary of the project is that it's been a producing silver mine up until 2016, and it's been on care and maintenance ever since. The mine has produced with head grades of about 15 ounces per ton silver, with with pretty high lead and zinc byproducts as well. They never, the previous owners never had the capital to invest in putting a plant there. And so this mine has always been, a toll milling mine, where they would truck the ore, sometimes great distances, up to 200 kilometers away, to have it processed. And of course, when you do that, you not only do you incur the extra trucking costs, but you also have to pay the mill a fee, and then you also lose recovery because that mill is not set up for your ore. So there's a lot of issues with toll milling, and those are issues that can be essentially solved if you've got access to capital and the engineering expertise to build a plant, which we have. So that was really the sort of the key driver to making the acquisition, was that we felt that we could put a plant there, expand production, and do all that for relatively modest capex. I think internally we've been projecting about $10 million USD for the whole expansion project. So with that in mind, that alone made sense as an acquisition. even back when silver prices were $16, $17 an ounce, because we think our costs will be substantially lower than that. Even when these guys were producing and toll milling, which I just mentioned is much higher cost, their costs back in 2015, which was their last full year of production, were still only about $16 per ounce. That's on an equivalent silver equivalent basis. So you compare that to some of the public companies out there; they're already lower cost than some of the silver public companies out there, and then we can lower that cost even more by putting a plant there. So it's I think a very compelling opportunity with silver prices the way they are now. This should pay back within months. And and then the next phase is the other I guess leg to the stool that I really liked was the exploration potential. These guys never really did what we would consider to be exploration, although they do have a historical resource. It's more of a mining resource. What are we going to mine next? With some traditional drilling that you would do on a deposit like this, we feel like we can, greatly expand the resources here, increase the mine life, and ultimately justify an expansion, a second expansion. The geology is relatively simple. So this is low-hanging fruit kind of exploration. It's not something where we have to go out and make a new discovery. We just sort of drill a long strike and a depth from the veins that we already know are there, and we should be able to put together a larger resource in due course.
Okay, so a couple follow-up questions. First, about kind of the previous margins and profit that they were making from this toll milling. You mentioned kind of a $16 per ounce cost. How profitable were they back then, even with the toll milling? So
they made a small profit in 2012 and 2013. They actually borrowed money in 2014 to do some minor capex stuff at the mine. And with that, with metal prices falling and, the additional interest costs that they started losing money in 2014. So 2014, 15, 16, they lost money as metal prices were falling. But yeah, at high metal prices, even as a toll milling operation, this was profitable.
Sure. Okay. So looking at that 16, you are able to raise $10 million to put in the mill. Very reasonable. How much can you decrease? Would you project you think you might be able to decrease that cost?
Look, this is just our management estimates, so this is not backed up by any external or independent work. But we think we can drop it by about $5. So our internal estimates are around $11 an ounce, all in, and that's all. By the way, I'm talking about all-in sustaining costs here. Both the $16 I mentioned earlier and the 11 is all in. So that includes the costs for treating the concentrate, which is substantial. That's a big cost as well.
Yeah. Okay. So you can do the math looking at gold now, or excuse me, silver is $24 give or take. So depending on the day anymore.
Yeah. It's volatile sometimes.
Okay. And talk to me about the exploration potential. It sounds like there is some deeper targets here that you could go after to expand the resource.
Right. So they basically the mine is high grade veins that are in the side of a mountain or a hill, I guess. And the mining very, very long ago would have started at surface, and just gradually they've been going deeper and deeper through adits every 30 meters or so. We're now at the bottom of the valley where to go deeper we have to do a ramp. But they actually did that. They did the next level below already back in 2015, 2016 before they had to shut the mine down. So there's some development already down there. Now, what they were doing is basically just following these veins, and there's 7 veins that are in the current non-43-101 resource. So those are veins that they would have essentially developed while they were developing the adits for the mine. And that's essentially how they estimated their internal resources, was just what they were able to add it or develop underground. So if you now can drill, which we can do, we can start drilling these veins at depth. They're all still going at the lowest levels that we have right now, so there's no reason to expect them to stop, at least for now. And then the strike length is also open. So they've only mined about 300 or 400 meters, depending on the vein, along strike. And these veins could go on double, triple the strike length. We don't know, because they're all open. So there's lots of potential along strike, and of course along strike all the upper levels haven't been mined either. That would be all still mineralized, and then at depth, all the veins are open as well. So between the strike length and the depth potential, there's certainly the opportunity for multiples of the resource that we think we have right now.
A lot of upside here, but I gotta ask you: you are operating in Peru, and there has been some geopolitical events taking place in the past couple of weeks. Obviously, every CEO operating in Peru will we'll say, Peru is a very safe jurisdiction. I continue to believe Peru is going to be a safe jurisdiction for mining, obviously. But give us your take. I mean, what are the challenges right now with the geopolitics and the change in the constitution, everything happening in the country?
Well, honestly, operationally, we haven't seen much of an impact because of the geopolitics. I mean, I think the geopolitics that have been going on definitely, they paint the country in somewhat of a bad light. It makes it look unstable. However, nothing that's going on, and the three interim presidents that we've had in the last few weeks, they're all, none of them are attacking mining or anything like that. I mean, it's their bread and butter in the country. So, the mining industry tends to get a lot of respect and tends to sail on through, no matter who's in power. So yeah, it's been, obviously it creates this air of instability, but, in a sense, the instability creates its own stability, is the way I look at it, because the Peru's very highly fragmented politically, and while that's not good for creating a stable government, it also means that you're unlikely to have someone kind of populist guy sweep into power, which we have seen in some of the neighboring countries over the years. And when that happens, then you have these dramatic changes overnight, which is very hard to deal with as a company. In Peru, that's not likely to happen, because there is strong oppositions, and there is it is a fragmented kind of political system there.
All right. David, I appreciate your time. It's a great introduction to the project. And, before we let you go, any last words you'd like to give our listeners?
Well, we're a newly listed company. We've only been listed over a month. Still getting the word out there. So please, visit us on our website, kuyasilver.com. We're also on social media, Twitter, Facebook, etc. So, so we look forward to hearing from new investors and people, and we're able to answer your questions if you have any.
All right. If anybody has any follow-up questions, they're also welcome to shoot me an email with those questions. I'll be sure to forward those on to David and his team. But best of luck to you through the rest of this year and into 2021, David.
Okay. Thanks, Trevor.